Hey guys, hope you are all having a great day today. Today we are going to be adding some much needed wrinkles, and hopefully pass on to you some clarity that should serve you guys to better understand what is going on. We are also going to be covering some serious developments that took place that shows how big companies lie to consumers straight-faced. We really need to talk about these things because they will inevitably show just how all the members are against us. The battle that rages on day by day for GameStop and AMC isn't between retailers and hedge funds. No, it is against absolutely every piece of the market, from the inconsequential to the dubiously malevolent members seeking to oust us from fortunes so they can keep business as it has been for so long, rigged and corrupt. We have some massive, and I mean massive, set of discoveries that came from an amazing deep dive by a Twitter user that show exactly what I said before in regards to GameStop's ambitions. We also had the media, in this case CNBC, attempt to divert blame of stock market manipulation onto shareholders that simply buy and hold stocks. SEC Chairman Gary Gensler took the questions and flipped it on its head, saving grace and sprouting hope and faith that some parts of the system might actually be working uncorrupted by the greed of the psychopathic maniacs that aim to take everything dear to you. As you can see, we have loads of topics to discuss today, and the main segment is pure due diligence for you guys to raise some IQ points and add wrinkles to those smooth brains. Before we begin, I want to deeply thank from the bottom of my circuit board the members that have donated or pledged support to this channel. I cannot put words at how grateful I am for all you have done and how your contributions have helped me be able to reinvest more into everything that goes into this channel to make this possible for the masses. You guys are the real heroes in this case, and I am indebted to each and every single one of you mad lads. If you ever wish to show financial support in any manner you deem fair, links are provided in this video's description to guide you. Before we begin, I must make the disclosure that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions to better understand and grasp the current situation we all face. Everything here is evidence I collect, and the opinions are based from my own experience and hard research into matters discussed. I only ask that you guys drop a like if you find the content to be informative and helpful. Without further delay, let us get started because we have a ton to talk about. First and foremost, let's add the wrinkles. Though this topic has been discussed in great detail by many people, I don't think most really understand what it is or the importance it has on the inflation and squeeze overall. What I am talking about are derivatives, or to be more precise, I am talking about over-the-counter derivatives. A derivative is a security with a price that is dependent or derived from one or various underlying assets. Over-the-counter derivatives are these same securities, but instead of being traded on centralized exchanges, they are instead traded in dealer networks. The reason these securities are called over-the-counter is because the trade is directly between two parties doing the transaction, rather than being listed on a normal exchange. Options and futures are great examples of derivatives. This is because the value from derivatives here is extracted from the underlying stock. The most basic principle behind derivatives is to earn profits based on speculation, which is why option trading is sometimes seen more as gambling or betting. You are speculating that your options, or derivatives, will pass a threshold by a certain time frame. Now, as I said, the subject of importance here is over-the-counter derivatives, which, as I said before, are not traded in exchanges and pose a much greater amount of risk, just like they pose a greater amount of reward. Though over-the-counter might seem like a small niche alternative for big money organizations, they actually do account for the absolute vast majority of derivatives traded in the entire world. Do not think of over-the-counter as a small and optional choice for members of the financial market. Think of it as the main network by which most derivative trades take place. Now, doing some research into over-the-counter derivatives, it appears that they have a lot of controversy and criticism behind them, for reasons that should shock nobody. Just typing OTC 2008 it in on a bar for a quick Google search results in dozens of links from research papers to journalistic entries on how derivatives were a major culprit in the recession and market crash that took place. I highly encourage you guys to read some of this stuff. It is truly fascinating as it is disgusting. After 2008, there has been more regulation and government oversight to them. Even the DTCC itself created their own entity known as the Global Trade Repository Service that sets out to create more oversight thought requirements of reporting trades and data. However, as all things seem to be in the financial markets, the compromise of centralizing these reports did not stop or really have much effect on OTC markets. In fact, let me show you some of the data. OTC derivatives increased by $300 million to a total of $15.8 trillion during the second half of year 2020 only. Reading the second takeaway is where the money shot is, guys. Gross credit exposure of OTC derivatives rose by $160 billion, reaching $3.4 trillion. We are seeing once again that members of the market are getting incredibly easy and are acting very carefree once again, just like they did prior to the collapse of the last financial crisis in 2008. The same exact freaking phenomenon is repeating itself, and it seems this problem could be compared to be much like a cycle, but each time the fall from grace, or the market collapse, is intended to happen in shorter time gaps. This is absolutely insane, and how nobody is really talking about this on the media or anywhere for that matter is really worrying. I mean, don't get me wrong, this is great for GME and AMC shareholders, but you get my drift. Outside of this is a huge economic problem that will keep on affecting millions of people not only in America, but around the world. We are literally gambling pieces for these institutions, and OTC is the casino. Now, let's put some of these pieces back in context with GME and AMC to really bring about the message I want to relay on you. I know this has all been a lot, so feel free to go back and listen again to what I said if you are a bit lost. We need to put our tinfoil hats here because what we are about to do now is enter a speculative theoretical capsule. The reason for this is that upon searching for OTC market information, it is quite literally impossible to get access to it. You need to have deep pockets, and I mean really deep, in order to access some of the much needed data to put two and two together. I had speculated about this before in one of my earlier DD videos, but this video is about to get absolutely insane, so buckle up. Why does GameStop have such a huge impact on so many stocks that have nothing to do with it? Remember that huge video I did where I discovered even biosectors looking for cures for cancer or some other diseases started following GME and reacting to it? We have AMC, a company that has nothing to do with GME, trailing it and sometimes even trading in really weird patterns against GME. We have all types of sectors having a weird relation to GameStop in particular, with some moving identical and then suddenly shifting and trading in precise opposite directions. Why is this? This channel went crazy for a month talking about ETFs and their role on this. What we haven't touched on, ladies and gentlemen, is swapping. Some people have briefly discussed it, but only marginally or superficially. What is happening is that they could be playing with interests with all these weird unconnected stocks, and setting up swaps in many of these stocks' interests. What I think is that they are using some established metric of risk on GameStop. We have seen how well those algorithms work, especially yesterday, and how the stock undid that entire surge in literally a single minute. They know how GME works, and have established preset metrics of risk. As such, containment of GME is crucial both long-term and short-term in the sense of a big catalyst that could drive it up immediately, or otherwise the continuous growth it should be having over time as many people buy the stock and not sell it, which, as data suggests, buy orders are consistently many times over the sell orders, with an average of over 5 times more buys than sell. So how do they defeat long-term growth? Easy. You start swapping and trading derivatives on the OTC market, taking risks from GameStop and replacing it with the risk of relatively weaker stocks, like we have seen in biotech or other sectors of the market. This provides them with a ton of money on hand to keep elaborating their day-to-day transactions and costs, and allows them to keep hiding positions through deep in the money options. I have made videos explaining how they do this in the past, so feel free to look these up. It is all about liability, guys. We know some hedge funds having a serious problem with accountability, and as such this is the glitch they are using to eliminate companies. Remember Toys R Us? This could be how they took it down. They pick a company that they think has no future, and rather than simply betting against it, they manufacture its death and insolvency through trading and swapping interests with other companies to raise tons of money that they use to further add negative weight and essentially crumble the company out of existence. It is a cycle money glitch that they can keep on repeating easily because they have managed to be able to find a way to hide positions, demonstrate enough capacity to offset the risks into unregulated markets in OTCs, and create a cash printer that lets them keep on adding negative weight or pressure on whoever they deem should be gone. They act as jury, judge and executioner in the market. I only hope that this made enough sense. Whatever you do, please comment below and let me know what you think. If this wasn't clear and it doesn't make sense, please let me know so I can remake this video and post it on Saturday or something. I want to make sure you guys understand this because this is a huge topic that explains a lot of what is happening and has happened since our last financial crisis. With that said, let us move on to some really juicy stuff. I came across a picture of a reply from Bloomberg, where they negate that what we saw on their terminals last week regarding the bunch of Brazilian hedge funds was true. In fact, Bloomberg attributed this to being some type of bug in the system and that they were deeply sorry for this glitch. You know what? This response doesn't make sense. We knew and multiple people were talking about the missing $1 million in put options that were somewhere. In a matter of an instant, we accidentally caught 3 Brazilian entities along with others that literally accounted for all the missing put options we were looking for, and now that we found them, Bloomberg is saying there was a glitch? In fact, you want to know what is crazy? Shortly after I made a huge video about this, I learned through some folks' comments that Brazil has serious regulations and don't allow firms like that to short American companies. They can only place long positions, so this makes it all the weirder. Furthermore, the way they worded this message appears to be very deliberate and methodical. It appears to me that using careful working, they are actually not saying that a glitch happened to show Brazil hedge funds having put options, but rather that the circumstance could be attributed to a glitch that they saw. This is perfect legal verbatim, so that if taken to court over this, they have a strong defense and plausible deniability. Like I said in the intro of this video, the amount of manipulation in the market isn't coming from hedge funds directly alone. Everyone in this game has to be considered corrupt and treated with a lot of scrutiny. I could not find the original source of this post, so I cannot credit this. However, whoever emailed Bloomberg, I want to thank you on behalf of everyone. Thank you so very much for taking time out of your day to email them and catch them on the act. I will give you a shout out on Twitter if you contact me with proof that indeed this was you. Now, what do you say we start getting jacked? A man named Patrick on Twitter decided to give back to the community of shareholders by looking into public trademarks and patents by GameStop. What he found was a treasure trove of amazing information that points to the massive leap that this company is about to take in regards to its ambitious growth to compete with giants such as Amazon and Walmart. Let me disclose to you some of the findings that were unearthed. Gaming gear, Atrix brand merchandise, toy figurines, sleeping bags, plush toys, grants, patent for applications, and much more. Now, you might think that when I say much more it's just more superficial level stuff, right? Incorrect. They apparently have trademarked the title GameStop Entertainment LLC, which indicated that GameStop might be coming up with a new concept store. What if they plan on building an ecosystem akin to a gaming arcade where they feature gaming tournaments and have a ton of merchandise and video game machines with bars and food? I tried looking in the English dictionary, and there currently aren't any words to describe an euphoric state of mind that could be adequately placed for how massive this would be. This is absolutely insane, and my circuits started frying the more I read. The posted included pictures and screenshots of everything he found. The price value for GameStop, not accounting for the squeeze, should be much higher than it currently is. Do not sleep on GME, fellas. Listen. Inflation is the most probable scenario that could catapult us into the squeeze, but that doesn't mean it is the only thing. If GameStop were to announce a crypto dividend in the future, and we know they are working to build an NFT team, it could very well match the light into the moon. This development comes as the biggest in this entire month, and I could not be prouder to be a GameStop shareholder. We going to the moon driving Lambos. And if that wasn't enough hype, SEC Chair Gary Gensler went live on CNBC and said something that really touched the bottom of my CPU. Take a listen.
You now have a whole new generation of investors going on TikTok, going on Reddit, going on all sorts of other places, promoting either cryptocurrency or promoting a stock. Where does the SEC see their role in that conversation?
I think it's the same it's been for decades. It's trying to foster good debate and dialogue, just like on this program here, about investing, and the retail engagement is positive, but also to guard against fraud and manipulation. And whether that's from big actors, big hedge funds in the markets, or not, and also to promote transparency. We are taking a real close look at market structure. And I recently started, engaging on Twitter, and to some of those Twitter followers that are writing about dark pools. We are looking very closely at this market structure that so many of our orders, retail public orders, are not going to the lit markets, but are going to internalizers, going to wholesalers who are taking the retail public's trades rather than sending them to the stock exchanges.
The clown host thought he was slick when presenting a heavily biased question when he tried to promote the motion that the SEC is not doing enough to combat retail traders simply talking about stocks and securities, something he called promoting. I guess it is a crime that should be punishable by the SEC to mention or talk in any positive light about a stock or security that Wall Street doesn't like. God forbid if banks and hedge funds lose money betting on a stock. The losses should only be accrued by uninformed and dumb people such as us. Gary, however, came and pretty much said nothing has changed, people are just fostering good dialogue just like they were on that interview. He then absolute hits the nail on the head when he says that one of the topics most people talk about is the concern that comes from broad manipulation, big actors like hedge funds, and that we favor transparency, which is the most truthful statement I have seen come from a SEC official. He then said the SEC is taking a close look at market structure, saying that he started engaging on Twitter and that they are looking now big time into dark pools, market structure. He acknowledges what we have been saying for a while, and that is that orders are not going to lit markets. I am very glad that the chairman seems to be a grounded individual who isn't living in a fantasy land and is recognizing the concern in the world right now. Very good statements that inspired some hope in me that at least there is someone of importance on the financial market that is, at least from I have seen, not bought out or too inept to understand what is going on. I am rooting big time for you, Gary. With that said, let us talk about today's data and what happened in the markets. The Fed reported that reverse repo operations for today resulted in over $931 billion. This is a notable increase over yesterday's reverse repo operations. AMC's dark pool transactions accounted for 63% of the total volume, while GameStop dark pool transactions accounted for 48% of the total volume today. According to Fidelity data, buy order flow for AMC was almost 3 times as big as the sell order flow, with GameStop's buy order flow being over 4 times bigger than the sell flow. Now, let us finish up with a recap today's performance. AMC had a pretty bad dip, falling off over 11% today. The stock had a relatively early neutral performance in the pre-market, running and trading right on the VWAP. After 7 a.m., the stock experienced a dip that brought it below the VWAP. The stock then consolidated for a bit before breaking out into market opening. Reaching over $35, AMC quickly experienced a target short ladder attack that left it reeling below $30. It had entered a bearish wedge which it broke the resistance but then traded sideways up until closing. AMC experienced another ladder attack that had it close at 29.84, well below the VWAP. To say this stock was heavily manipulated to be under $30 is an understatement. As I said, the battle for AMC this week was $30, and it appears that current circumstances favor hedge funds. However, we aren't here for price surges, so take this with a smile and buy this dip as you can get more shares for your buck. GameStop also traded bearishly, losing almost 4% today. The stock opened to some increased volatility. This could be a consequence of its addition to the midcap 400. The stock had a decline in its highs throughout the entire day. GME was consistently under the VWAP and entered a bearish wedge which it then broke support and fell even further. Upon dipping below 146, the stock once again entered another falling wedge, but this time it managed to hold better and break resistance, reaching 149.36. The stock then was victim to a short attack that dipped it to a closing price of 146.80, well below the VWAP. Nothing like a great sale like today for GameStop. I bought a couple shares today and I am very content with my purchase. And with that, I want to ask you guys to let me know how you feel about the video, how you feel about the due diligence we discussed today, and if you feel you understand the situation a little better now. Let me know if this was helpful in any way, or if you need me to do this video again explaining it differently so you can better understand. Drop a like if you liked the video and let me know what you think. Thank you all for all the love and support you give me. I am a relatively small channel in comparison to others, and the fact that so many of you keep coming back really means a ton to me. Big shout out to all the Patreons and one-time donators, whose contributions have carried this channel and everyone who watches it. Links will be in the description if you want to become an active member and help support this channel. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one tomorrow. To the moon.